Buying a home is the most expensive purchase you will make, but I have several tips for you on how to save money while doing so, and stay tuned to the end because I have a big tip that a lot of people don't think of that will help you save that extra money when you buy your home. The very first thing, improve your credit score. We know, we've heard it over and over, credit score, how important it is. Everybody needs to work on their credit score. But do you really know how much that impacts things? That is the very first thing that lenders are going to look at, and it can make or break you getting a loan. So right out the gate, it can keep you from getting that home. But then if you do get approved, it may kick you out of qualifying for certain loans, as well as really increase what your monthly payment would be, the interest rate you're getting, a lot of things like that. There are so many different loans out there nowadays, but they all require different credit scores. So if you've got a really low credit score that barely gets you qualified, that means you may qualify for some of those really high interest loans that have all these gimmicks to them, but you may miss out on the really good loans because you have that bad credit score. So if you can, work on that because that will really help you save some money. Next is going to be increase your down payment. You probably already heard this one too. We know we need 20% down, and that's a big number. But the reason is because 20% will kick you out of having to pay PMI. PMI is private mortgage insurance, and it's basically something that is required to protect the lender. So if you are borrowing more than 80% of the purchase price, this is what you have to pay. So we have a lot of those 0% down loans, or the loans that only require 3% down, and those are going to require that PMI every month to protect the lender and make this chance not as risky for them. Now, PMI typically costs you between 0.5 and 1% of the loan amount. So if your loan is $200,000, that means you would pay $2,000 in PMI just this year. That is insane. $2,000 just gone out the window. You're not putting it towards your principal. You're not putting it in your taxes on the house or your insurance on the house. It's just something to protect the lender that you'll never see again. So that's why I always recommend, if you can, do 20% down. Now you may say 20% is way too much. That's just not reasonable for me. And then I would suggest, let's look at a slightly cheaper price range if you can find a house that would work even for a year or two. Because if you can get that house, live in it for just a year or two, you can save up enough money to have that 20% down on your dream home and then be in a much better situation. I personally bought my house 2 years ago, and I've already made $50,000 in equity just from where this market has gone up. So when I get ready to sell this home, I'm instantly going to have $50,000 to put down on a home, and that's going to tremendously help my interest rate, and I'm not going to have to pay any PMI. The next thing I'm going to suggest would be to pay for mortgage points. You may have heard these called discount points, but these are fees directly paid to the lender at closing in exchange for a reduced interest rate. Now, you may have heard this called buying down the interest rate, but basically this will lower your monthly payment and save you lots of money in the long run. One discount point typically buys you 1% of the loan. So if you're purchasing that $200,000 home, then you can get one discount for $2,000. The discount will vary with each lender, but it will typically get you about 0.25% of a discount. So look at this example. So if you see that you are paying $3,500 in discount point, it will end up saving you over $15,500 in the long run. If you go up a little bit and put down $4,000 in points, it will end up saving you over $25,600 in the long run. That is insane. That is a lot of money that it really could save you just by putting up that much money up front in discount points. Now, the interest that you pay on your home is a tax deduction, so that is great. You get to write it off at the end of the year when you meet with your tax accountant. Ask them, if you paid discount points, will that also get to count as a tax deduction for you, because that's an extra way that you can save and go ahead and pay some of that off. I also recommend shopping lenders. I always say look around at least 3 before making your final decision. That just ensures that you've really checked everything around. Closing costs are expensive. You don't want to have to go through this more than once, so make sure you're getting the exact right one whenever you do this the first time. And like I was telling you earlier, there are some major differences in loans, and certain lenders specialize in some of these loans. We have a lender that's very specific to our area that offers a PATH loan. And what it is, it's one of the 0% down loans, but it is open to all of the areas instead of certain areas like the USDA is. So if you know exactly what you're wanting, you can know which lender would be the best and then compare their rates and what they're going to give you. Also, let's say you really like one of these lenders over here, but this lender is cheaper because you've done your price comparison. You can always take that price back to the lender over here that you really like and see if they'll do a price match for you. And that's a win-win for everyone. Also, certain lenders offer different discounts and different bonuses. I know one of my lenders pays for the appraisals. Other lenders will offer a free home warranty and different things like that to make it better. And you can really weigh all that in and see what's going to be the best for you in the long run. Okay, I know this next one is going to sound like I'm really contradicting myself, but I'm not. Do not use up all of your savings. I know I just told you guys, put down 20%, pay for some mortgage points, but don't use it all up. Home buying is an expensive process, and there are certain things that are going to come up once you have the house, repairs or upgrades, anything like that that you're wanting to do. And if you have used up every single bit of your savings, that could really get you up a creek without a paddle. We don't want to do that. We don't want to go swimming up there and not be prepared. So save a little bit of money. You can use a lot of it to put down, but make sure you've got some set aside for that rainy day in case anything could happen. Educate yourself on many first-time homebuyer programs. There are so many great homebuyer programs that are being offered right now. I personally have helped a client who closed a few months ago, and she was able to get the entire down payment covered by grants, and then we were able to negotiate and get the sellers to cover all of her closing costs. So she was able to have a lot more freedom in the home buying process because what she needed was very hard to find in that price range. So she really had to go with this kind of program. And it was a win-win for her. She was able to get it. There's all kinds of programs for specific jobs out there, first-time home buyers, all this kinds of stuff. And as long as you have a decent credit score, you can get several of those types of loans here in Georgia and across America. This has made home buying so much more affordable for most people. If you're going to be possibly purchasing anytime soon, go ahead, read up everything you can, know what all is involved. Hey, my channel is a great place to start. Go ahead and subscribe now so you can learn all you can. No, but seriously, read up, get to know everything so that you can be a really informed buyer. Go for a shorter mortgage term. So typically we see most home loans for 30 years. But if you can reduce that to just 15 or 20 years, it will save you a good bit of money. Yes, it is going to cost you more each month, but the savings in the end will really be worth it and make it so much more doable on you in the amount that you save. If you can't completely afford to switch up and do a 15 or 20 year loan, another option is to always double up on a payment every 6 months or even every year, because that extra amount will go towards your principal and it will help you cut out on some of that interest that you're paying. Okay, so I do have a really big tip, like I promised for you guys, to help you save up a bunch of money. Rent out a space in your home. Now, I have seen people get really creative and convert garages, basements, attics, all this into an extra room. I had a 4-bedroom home. I didn't need all the space, so I rented out one of the bedrooms. It was just a bedroom being rented, but it paid for half of my mortgage every month. Could you imagine if you had half of the mortgage payment, what all you could do with that? It was not an inconvenience. They literally stayed themselves, and it was a great situation. So when I sold that house, I bought another house that had a separate basement. So I could rent out one whole level of the house. Obviously on that one, I got a lot more money because they would get their entire living space, but I was able to make a significant amount of money every month off of that, and I did not have a single mortgage payment. In fact, I made money off of that. So that may not be something long-term for you guys, but if you're looking to really save up and make some money over these next few years, that's a really creative way for you to do so affordably. I'm curious, have any of you guys ever done this and had success? If so, let me know in the comments. Check out these videos. This will let you know some other things to do when you get ready to buy your home. As always, I'm your unicorn real estate agent, turning your home dreams into a reality.